the full screen view here. And again, we did see existing home sales beat market expectations, saw that 2% rate of growth. But despite that, we're seeing the dollar largely giving back those advances. And we're getting a near-term break of support here. This near-term Fibonacci overlap 11,951 and to 11,965 zone. So along with that, if we're able to finally close below these levels, and again, we made a few attempts at this region early on this month, but if we do see a meaningful break, close below this region here, we'll favor the downside targets, and of course may bring up former resistance zones here, 11,901, 50% retrace 11,898. So we'll keep a close eye on that region here, see if it will come back into play. But along with that, we're also watching this sort of bearish formation here on the relative strength index. And as we do have this sort of bearish tilt here, we'll favor the downside risk as we break support. We'll wait for a little bit more confirmation going into the weekend. But also be mindful of, again, market participation here. And of course, those of you that have access to Daily FX on Demand or even the Daily FX Speculative Sentiment Index. A lot of interesting developments this week. Along with that, let's bring up some pairs here. So pound dollar is probably the most meaningful development I think we're seeing all week long. Some key data out of the region there where we did see the consumer price index, especially the core rate of inflation there, come in much stronger than expected, picking up to an annualized 1.2%. On the backdrop of that, I think we have a meaningful break here of at least just the near-term range that we've been watching right now. So I'm still watching for these ongoing closing prices above 56.40, let's call it, into the 56.50 zone here, Fibonacci overlap. And as long as we continue to see these dynamics, I'll favor the top side along with that bullish tilt in the RSI figure as well. So we'll continue to watch that. But the one thing that I really want to bring up here with you guys, I'll just bring up the Daily FX On Demand website for this one. For those of you that have access here, one thing we've been noting is, actually, let me refresh the page here. The pound dollar SSI, we've been seeing a lot of volatility, not across the board, not only across the board here, but also, again, with the SSI read, we've been seeing this flip back and forth between negative, positive territory all week long, following the CPI print from earlier in the week. So we'll continue to watch that, but along with that price action, and again, we'll see if, we'll get a larger sort of trajectory, larger trend going on here, but for now, we'll continue to watch the top side targets. Next region of interest large is all the way up here, 23.6 retrace, 57.50 zone. So we'll keep that on the radar along with longer dating retracement zone, 57.80, 57.90 zone. So that cloud of Fibonacci is going to come back again. I'll continue to watch that region as long as, again, we're able to make these closes above near-term resistance zones, former resistance zones, I should say. And we'll continue to look for some meaningful developments going forward. Let me just take that off the screen here. But we'll also keep a very close eye on the Aussie dollar, as I think in terms of price action, some meaningful developments on our end as we are seeing a break of this near-term bullish setup on the RSI. Right now, I'll wait for a little bit more clarity, but one thing I will note is just the near-term patterns we've been carving out all week long, this nice series of lower highs, lower lows, and of course, this ongoing failed attempt here, lack of momentum, if you will, to close above 73.80, 73.90 zone. So I'm taking that as, again, maybe a near-term topping process. And as we do see that bullish momentum fade away here, could be suggestive we could be just, at least for now, on our way back to support. Close basis 72.40. We'll watch that 100% extension. But should this break materialize and we see a little bit more of a bearish pattern really starts to take shape over the longer-term course here, could be on the way back to the downside. And of course, some fundamental themes to watch will be the whole concerns here, growing concerns surrounding China. Of course, China still Australia's largest trading partner. We'll see how that dynamic will shape. But again, we'll continue to watch some of the downside risk here below, again, near-term resistance, near-term support, again, 72.40, 72.50 zone. I have a clutter of longer-term Fibonacci retracements here. 71.80 to be, again, 618 longer dating one. I'll even watch 70.90 zone to the downside, longer dating 786 retracement. But we'll watch and see whether or not these near-term triggers will continue to take shape in the days ahead. Again, might be, again, a little bit highlighting some further declines in the exchange rate here, so we'll continue to watch that. But along with that, quite different story here, actually, for Kiwi dollar, which is actually still preserving that bullish momentum. So we'll continue to watch near-term resistance from here, 66.90 zone, 67 handle here. And I'm still seeing a lot of expectations for the RBNZ, the Reserve Bank of New Zealand, to further embark on its easing cycle. We'll see if that will be largely the case there. Again, they're coming up in September. But for now, again, maybe it's just some further consolidation before we get a resumption of course, the long-term bearish trend. But a near-term theme that I'm watching, a pair of interest, if you will, the Aussie Kiwi. Right, so one thing that we've been watching, of course, long-term, I'm still relatively bearish on this as it's still holding that long-term trend from back in 2011. But for now, we did have a meaningful break topside, and right now I'm watching this broader channel formation here, along with the nice series of lower highs, lower lows. And as we do break near-term support here, guys, this 111 handle, if we do get a nice closing price below that region, could dictate some further declines here, along with the bearish setup in RSI. So again, a cross of interest here. Again, still bearish long term, but right now we're approaching some key levels to watch. So again, former 786 retrace, 110.20 zone, 110.30 zone. Just near term area of interest. We'll see if we could hold above there, but a break to the downside may expose the July lows, and along with some of the key former resistance zones, if you will, that we were watching in the past. But again, key developments here, and of course, telling the story, guys, that Kiwi certainly outpacing its Australian counterpart as of late, and we'll see if that will continue to be the case going forward. And we'll continue to watch the Canadian dollar tomorrow. Might be a little bit more interesting as we have some big data prints coming out of the region. Retail sales, we're looking for further pickup there, but the big print that I think I'm going to personally watch, maybe a little bit more meaningful, if you will, for market reaction, as well as the Bank of Canada outlook, will be the inflation report, the consumer price index, as we are looking for an uptick in the core rate of inflation to an annualized 2.4%, should that materialize. And especially as we did get that insurance rate cut from earlier in the year, we are seeing the Bank of Canada, again, largely retain a dovish tone for monetary policy. But in fact, if we do see the Fed show further willingness to delay the normalization cycle, may give the BOC a little bit more breathing space, if you will. And again, we'll continue to watch the near-term price action, but it looks as though we continue to find some near-term resistance here, just coming off of that today. And on that, and as we do expect some good data out of Canada tomorrow, we'll just be watching near-term support. Again, a lot of Fibonacci's overlapping right around, again, that 129.40 zone into the 50 zone, so we'll be mindful of that zone, along with the monthly lows that we set. However, as we largely struggle to retain the bullish setup here, dates all the way back to August period, late April period, excuse me. I'm not sure if we're going to be able to hold up here. It could be at risk for further pullback, especially if we do get some good numbers out of Canada tomorrow. So I'll be keeping a very close eye on that number. But should we break below, again, near-term support, 29.40, 29.60 zone, I'll be personally keeping a very close eye on former resistance here, that 128 handle, again, which largely kept prices capped all year long, right before we jumped into that July period. So we'll be keeping a very close eye on that. And again, we'll see how the data will fare for the Canadian dollar, not only the near-term outlook, but of course the Bank of Canada outlook as well. But dollar yen, yesterday after the Fed, meaningful break to the downside. And one thing to also watch, guys, is going to be this risk-averse markets, where globally we're seeing equities market really take a spill right now. Looks as though we may see this continue. And of course, a lot of arguments there, a lot of things to point out with concerns surrounding China, geopolitical risks still remain, and of course this uncertainty surrounding the global growth outlook. On the broader looks right now, again, break below support yesterday, nice closing price below 123.80 zone. On the backdrop of that, we'll favor the downside as this bearish momentum really starts to take shape. With that said, we'll watch the 30-2 retracement, 123 handle, all the way down into this 22.80 zone, 786 extension. We'll see if that will act as near-term support, as it did catch, again, help out the dollar yen during this mid into late July period. We held above that very nicely here. But for now, as long as the bearish tilt remains on the momentum indicator, downside risk remains. And on my end, we'll continue to watch some of the key former resistance zones here. 121.90 up first. We'll see if that will hold up. But again, if we do see this risk-off environment, and if we do see, again, further delays in the Fed easing cycle, and even on the backdrop of China concerns, there are speculation that maybe that could force the Bank of Japan to act. But my personal expectations, guys, not a recommendation from Daily Fix or FXCM. I still think the BOJ will hold out, maybe closer to, again, 2017 period, when we're going to see the next batch of sales tax hike hit the region. So still think the BOJ wants to keep some ammunition stored for that. But for now, again, I don't see any market or my end, real commentary very suggestive that we're going to get some sort of further expansion in the BOJ. So on that, if we do get some disappointment, market players scaling those expectations back, I wouldn't be surprised if we do see some further Japanese yen strength. And of course, we'll continue to watch risk sentiment from here. But it's really the crosses that I like watching right now. So few pairs that we've been watching here. One is the Aussie yen. Very meaningful break here of this near-term bullish momentum. So we'll see how this will continue to materialize. But we got a break of that. We'll wait for this pattern here, but largely looks as though it's giving way. And again, we're approaching near-term support here. But the way I'm looking at this, guys, remember, it's broken that long-term trend from back in 2009. So on that puts us on a more bearish course from here. And also, even if you look at it near-term pattern, looks more like a descending triangle than anything on my end. So you know what? We're approaching the apex, and again, textbook definition, guys, 20-30% before we hit that. That's when we tend to get a meaningful move in the exchange rate, so we'll look for that going forward here, but a very nice setup, I think. And of course, with the policy divergence here, the area that I see the most risk surprise is, of course, the RBA. And I'll go into that a little bit here. The reason being, and again, a lot of some clients here that I talk to, some of the market players that I go back and forth with, bring up this argument. RBA is not ready to move. They've been very upbeat on the economy, very neutral tone, but I think that's where the risk lies, right? The risk for surprise. Given the recent commentary from the RBA, I think they're the bank that could actually really show a meaningful shift in the tone, could catch market players off guard there, and again, spur some weakness in the Aussie. And I think that's something that we're going to have to watch near-term dynamic. But even on the backdrop of that, we saw the RBA minutes there, and based on some of the statements that we got from the central bank earlier in the week, my personal views here again, looks as though the RBA's game plan here, and of course they want that weaker exchange rate, but seems as though they're going to wait on the Fed. Maybe that's their largely their game plan here, waiting for the Federal Reserve to start their normalization cycle. And again, that should put some further downside pressures on the exchange rate, so the RBA will get what they want without, again, further disrupting what's happening in the economy there. And of course, I think the RBA is really stuck in a hard place right now, as again, home affordability at record lows, while we're still seeing elevated home prices. And for them to further reduce the benchmark interest rate could raise some of that risk. So they're keeping a very close eye on that housing market. We will largely do the same here. But again, I think the RBA is one of the big banks here, big central banks that could be at a risk for the surprise. And again, with the Fed now starting to show a more dovish tone, will that throw a wrench into things for the RBA? And again, will we see the RBA come under pressure largely to further embark on the easing cycle? And on the backdrop of that, again, surprise factors, I'll watch this pair. It looks kind of nice right now. And of course, I'll also keep a very close eye on the euro-yen here. And again, euro is largely being seen as sort of a funding currency given what's happening in the ECB. But we're making a run back into near-term resistance right now. We'll watch some of the highs that we set earlier in this month. Bullish momentum at least looks as though it's holding up for now. It looks as though we're going to try to make a meaningful break here. But we'll continue to watch what's going to happen between these two pairs right now. Again, given that the Japanese yen, largely known as, of course, right, the funding currency of choice historically, and again, now that the euro is coming into play here, may see some further size price action here, but may give us a good sense of how market participation, market sentiment will largely fare from here. But we'll also keep it very close on the Kiwi yen. Very similar dynamics with the Aussie yen, where will we see this give back, largely fail to retain that bullish momentum and get a continuation of the longer term trend. So Kiwi yen, Aussie yen, again, given the risk off environment here, looks as though some nice plays here. And more than anything, just looks as though symmetrical triangle, even a descending triangle, if you will, whatever you want to call this, but continuation pattern. Given the break of the long-term bull trend here, will favor the downside. And again, we'll see what's and how the monetary policy outlook will continue to take shape from where we are. But some nice patterns to watch here. We'll continue to follow these themes. But, we'll watch what's going to happen globally here, guys. DAX is showing a meaningful decline today. And we actually broke below the 618 here. I pulled this back here from all the way back in the lows that we had from the beginning of the year. And we just cracked the 618, guys. 10,532. Looks as though we could be on our way for further decline. And all I'll do from here is watch. Again, 786 lines up very nicely here with former resistance zones right around 1034. We'll even call it all the way into 1045 region there, but we could be coming about that key region as we're breaking below the 618, and as we do see that RSI dip into oversold territory. So again, often, I see clients mistaken, market players mistaken that, automatically once we get this oversold signal, should we be looking to buy? That's not my take. And as long as we have the bear structure in play, I'll favor the downside. But the thing that I like to do once you get to some of these levels, see these readings on the RSI, we'll watch some of the previous lows there, see if it's going to act as support. And again, may give us a sense of when some of the decline here could be waning, when we could finally see some bottoming process here. And as we start to dip below 30, I'll favor the downside still. And again, we'll watch some of the key targets here. Just before, again, we get into former resistance, though, I'll watch 320 zone here. We'll see if that's going to be area of interest right now. But for now, downside risk remains. And of course, with the Nikkei 225, broke support here, near-term support, right around, again, 19,997, 2024 region. As long as we do that, and again, we're straddling the next area of interest, 618 retracement here, showing a meaningful break to the downside. With that, again, a very bearish picture really starting to take shape. We'll see if this RSI will also dabble below 30 to give us a little bit more conviction to the downside. But again, as we're breaking below the 618 retracement here, could bring up the 786 here, 19,446. So we'll keep the downside targets remain in play. But overall, guys, looks as if we're in this situation again where we're seeing this risk-off environment, a lot of uncertainty in the market here, given what's happening in, again, Asia Pacific region. Eurozone, we're getting a little bit more clarity on Greece, but of course, that's another theme I want to talk about here is the ECB. And, we have been seeing Germany largely benefit from this economic expansion in China, where, again, they're trying to move away from this export-driven market to a more consumer-based economy. And, of course, those luxury exporters out of Germany, out of France, have been very big beneficiaries of that. So one of my big concerns is, this slowdown in China, how will that impact the outlook for Euro area? Might be responsible, again, for some of the bearishness that we're seeing in German equities right now, as it really dampens the outlook for the big exporters there. So we'll continue to watch some of those dynamics right now. But, will that force the ECB to act? And again, we saw some very dovish comments coming out from Governing Council member Mr. Ewald Watney saying, again, they will stay on course, fully implement QE until at least September of 2016. And again, giving us this sense that, again, China may have a material impact on their economy. So pairs that I like watching right now, Euro Pound, testing resistance here, guys. We had a few failed attempts to close back above. It's a little outdated retracement, but failed to close above this 23.6 retrace, 71.40 zone. So I'll take that as a near-term signal. And again, we'll continue to watch for a little bit of a better signal here, guys. Break of this near-term bullish momentum. I'm waiting for that for a key juncture, but again, we've seen a few attempts here, few failed attempts here. 100-day moving average has also been keeping prices capped since July period, so we'll watch for that as another sort of near-term indicator. But we'll continue to watch some of the bigger themes, and really it's the cross that I like watching right now. But the pairs to watch also, a little bit more of interest next week, guys, is going to be the pound pairs. And again, we're watching these triangle formations. And again, pound Aussie is the one that I really like, as I think we could get a technical trigger here, a bullish signal on the RSI a little bit before some of the other cross pairs. But again, this one's still in this ascending triangle formation. Apex is all the way out here. So again, maybe closer to September period, we could be looking for that break in price. But, RSI trigger could be coming about, so we'll look for that. But even the pound Kiwi, very similar setup. We'll wait for the break in. Momentum indicator, the bearish trend there, but even in terms of price, very clean ascending triangle formation here. We'll continue to watch these patterns there. And again, we'll just wait for a better timing of this, but all that to say, we'll look for these pairs, the cross pairs, again, that fundamentally make a lot of sense given the divergence in monetary policy outlook.